Good day, everyone. We are doing accounting, National Senior Certificate. We are specializing with this paper for now, which is November 2022. Accounting November 2020 in bracket 2. We are doing paper 2. We have already done question 1 and question 2 of this paper, and today we are continuing with question 3. And question 3 is based on budgeting. Question 3 is based on budgeting. Budgeting. It is very important that the business needs to budget so that it does not experience cash flow problems. So this section is a very important section of the business, because if the business is failing to budget accordingly, then the chances that the business may run out of cash, they are very high. So therefore it is important that the budget must be done properly so that we are able to meet the daily life expenses of the business, the daily operations of the business, and all the expenses that are incurred on daily basis. So this is the budget. Question 3, it says Blossom Pty Ltd sells expensive ladies' dresses of high quality. They also repair dresses for customers, but they aim to break even on this service. Customers are allowed to buy dresses for cash and on credit, but they are required to pay cash for all repairs. The information relates to the budget period ending 31st May 2021. So our budget period ends on the 31st of May. We are budgeting for 3 months. We are budgeting for March, April, and May. Right. The first thing maybe that one needs to clarify here is that when the business is selling, you will have something that is called total sales. Total sales. And the percentage for total sales is 100%. The percentage for total sales is 100%. The total sales will give you 100%. But the business, there are 2 methods of selling. The business can either be selling for cash or be selling on credit. Selling for cash or be selling on credit. If the percentage for cash sales is 60%, for example, it will then mean that the percentage for credit sales will be 40%, because the total sales percentage is 100%. So it's very easy in the business to budget for the cash sales, because when you are selling for cash, when you are budgeting that you are going to sell for cash for 100,000, you know that you will be selling and at the same time you will be receiving that cash. So if your budget is 100,000 cash sales, it means those cash sales, that amount you will get it on at the same time. So it's very easy to budget for the cash sales. But the problem comes when we now have to deal with the credit sales. It's very difficult to budget for the credit sales, because when you are selling on credit, you don't get cash at the same time. You're selling to your customers, and then your customers are paying you at a later stage. So that is why when you have to do the budget, there is a schedule that is very important for you to do before you go to the cash budget, which is called the Debtors Collection schedule. Because remember, the people that buys on credit from us, when we are selling on credit, those people are given a special name. They are called debtors. And when we are selling to them, we do give them the credit terms as to how are they expected to pay us. So therefore we can be able to budget accordingly, because we know how are we going to collect our money from them. And we also focus on the past experiences as to how have they been paying us, and therefore be able to establish as to how are we collecting the money from the debtors. When you look at this business, if you go to your question paper now, on page 10 of the question paper, question 3, there is information A there. Information A has got total sales and cost of sales. We have the total sales for March, April, and May. And there's a transaction there which tells us that goods are sold at a markup of 75% on cost, and credit sales are expected to be 65% of the total sales. Credit sales are expected to be 65% of the total sales. If credit sales are expected to be 65% of the total sales, then that tells us that our cash sales is 35%, because total sales should give us 100%. So here we are selling on credit, and the percentage for credit sales is 65%, and therefore for the cash sales it will then be 35%. And if you go to transaction B, we have our expectations there as to how are we going to collect the money that is with our debtors. When we sell on credit, how do we then collect our money? So expected debtors collection based on the past. So in the past, 40% collected in the month of sale. There is 40%. 40% is collected in the month of sale. 40% collected in the month of sale. 40% is collected in the month of sales for a debtor to qualify for 6% discount. 40% is collected in the month of sale, and therefore you will then have a 6% discount. In most cases, businesses, when you are paying within the month of sale, you qualify for a discount. That is another form, that is another way in which businesses encourages people to pay as early as possible, because they tell you that if you pay within the month of sale, if you buy in March and you come back at the end of March, you pay same time, you will then qualify for a 6% discount. And then 50% is collected in the month following the month of sale. So the first collection is 40%, the second collection is 50% in the month following the month of sale. The second collection is 50% in the month following the month of sale, and then 8% is collected 2 months after the sale. And then the third collection is 8%. The third collection is 8%, and then we are told that 2% is regarded as uncollectible. So 2% is bad debts. 2% bad debts. So 2% is bad debts. Remember, when you are budgeting for something that you have not yet received it. We are budgeting for the money that we are going to be collecting from the debtors, and it is always right to leave that room for disappointment. You cannot be budgeting for 100%. If you look at this business is not budgeting for 100%, because they are budgeting for 40 to collect 40% in the month of sale, 50% in the month following that, and then 80%. And if you add these percentages, you get 98%. So this business is expecting that 98% of the amount that is money that is owing by our debtors will be collected, and only 2% will be written off. We are expecting that out of the 100% that we sell on credit, then 2% will not be collected. It will be bad debts. So let us then start with our calculations now. Let's look at our debtors collection schedule here. We have the month, the credit sales, money to be collected in March from our debtors, April and May. So let's start with January credit sales. January credit sales amount to 204,750. And if you look at our collections, on average, we are collecting within 3 months. Month of sale, the month following that, and then the month following that. So we have these 3 percentages. So if you look at the credit sales for January, which is 204,750, so we are planning to sell on credit for 204,750. So the first collection will be in January, according to that, because we are saying that the first collection is in the month of sale. So the first collection will be in January, the second collection will be in February, and the third collection will be in March. So this is the third collection. So which then tells us that in April and May, we are not expecting to get anything from people who bought on credit from us in January. So if we want to verify this 16,380, we can check. Let's take our calculators. The credit sales for January was 204,750. Credit sales, we sold goods to the value of 204. We are planning to sell for 204,750. And then the first collection will be in January according to that, because the first collection is in the month of sale. So the first collection will be in January, the second collection will be in February, and the third collection will be in March. So the third collection is what percentage? The third collection is 8%. So let us prove 204,750 multiplied by 8%. Multiply by 8% and see what is it that we are getting. 16,308. So this is the 16,380 that has already been calculated for you, and we are not expecting to get anything from the people who bought in January for in April and May, because they would have finished paying, because it will be January, February and March. And now let us proceed to the credit sales for February and look at our collection. The credit sales for February is 250,000, and the first collection is going to be in February according to how we collect from the debtors. So it is going to be February, March and April. That's 3 collections. February, March and April. So it means we are not going to receive anything in the month of May from the people who bought from us in February, because the first collection is in the month of sale. So if we are counting 3 collections, if we sold to these people in February on credit, so if the first collection is in the month of sale, it will be February, March and April. So which then tells us that in May we will not be receiving anything from these people. They would have finished paying us. So proceeding to March, the credit sales for March, we are planning to have 364,000 credit sales, and then the first collection will be in March. So the first collection, because the first collection, this is very important to note the first collection. The first collection is in the month of sale. So if we sold these goods to them in March for 364,000, the first collection will be in March, the second one will be in April, and then there will also be the third one in May, which we need to calculate. And then what is the percentage of the third collection? It is 8%. So let us then calculate 364,000. 364,000, which is our credit sales for March, multiply by, this is the first collection in March, the second collection in April, so we want the third collection, which is 8%, multiply by 8 over 100, 8%. So that is 29,120. So the third collection will be 29,120. 29,120. And we are done with March, because we have the 3 collections. We sold goods in March. The first collection is in March, the second collection is in April, and the third collection is in May. And then coming to April credit sales, we are planning to have 409,500 credit sales for April. So is there anything that we are going to receive from the people who bought on credit from us in April during the month of March? The answer is nothing. We are not going to receive anything from these people, because they had not yet purchased from us. They purchased in April. So the first collection will be in April. So the first collection will be in April, which has already been entered in our answer sheets for us, which is 153,972. So it means now we need to calculate the second collection, because if they bought goods in April, it will be April, May and June. But remember, our budget period ends in May, so we just have to calculate only May, because April has already been calculated for us. So it will be 409,500 409,500. The first collection is April and the second collection is May, and the percentage for the second collection is 50%. Multiply by 50%. That is 204,750. 204,750. The second collection will be 204,750. Let's just verify this. 409,500 multiplied by 50%. You can just divide it by 2. 50% is just divided by 2. That's 204,750. We are still going to receive something from the people who bought from us in April during the month of June. But we are not going to calculate June because we are only budgeting for March, April, and May. Now coming to May, the credit sales for May, the amount has not been given, so we need to calculate the amount for the credit sales for May. So, but what is it that we are having here? We are having the total sales for May. The total sales for May is 770,000. That's the total sales given in information A. And we were told at the beginning of the transactions that credit sales is 65% of the total sales. So it is 770,000 multiplied by 65%. 770,000 multiplied by 65%. Let's check. The total sales for May is 770,000. Then it will be 770,000 multiplied by 65%. That is 500,000, 500,000. So the credit sales is 500,000, 500. 500,000, 500. Credit sales is 500,000, 500. Right. Now we have the credit sales for May. The next question, is there anything we are going to receive in March from the people who bought from us on credit in May? The answer is no. Right? April, the answer again is no, because these people bought from us in May. So they were not owing us anything in March and April. So they only bought from us in May, and their first payment, the first collection, will also be in May. And because here, our collection, we have 40% in the month of sale. So the first collection will be in May, which is 40% in the month of sale. Let's calculate that. So we have 500,500 multiplied by 40%. 500,500 multiplied by 40%, that's 200,200. But remember, these people are entitled to a 6% discount. So therefore, the calculation will be 500,500 multiplied by, the first collection is 40%, and then the discount is 6%. So which then tells us we are not going to get 100% of this amount. So if the discount is 6%, it means we will get only 94% of this amount. 94%. So it's 500,500 multiplied by 40% multiplied by 96%. Multiplied by 94%. 94 over 100. So the amount is 188,188. 188,188. So you have 188,000 here, 188. The first collection, please note the calculation of the first collection. The first collection is subject to 6% discount. It's 40%, so that will be 500,500 multiplied by 40%. But that 40% again is subject to 6% discount. And if we are discounting it by 6%, it means we are not going to get 100% of that amount. We are only going to get only 94%. That is why it is multiplied by 40%, multiplied by 94%. And then the amount is 188,188. So now we need to calculate the total, because the instruction here was to complete the debtors collection schedule for March to May. So we need to calculate the totals here. The total. Let's start with May. Our total for May will be 29,120 plus 204,750 plus 188,188,000. That's 422,058. 422,058. That's the total that we are expecting to receive from our customers in May. Let's calculate the total for April. The total for April is 20,020 plus 182,000 plus 153,972. 153,972 equals to 355,992. And the total for March? Total for March is 16,380 plus 125,125 plus 136,864 equals to 278,369. 278,369. So these three amounts now have to be transferred to our budget. So we are expecting to receive in the month of March, we are expecting to collect from our debtors 278,369, and from April it's 355,992, and May is 422,058. So this is the debtors collection schedule. It's like this thing, if you can make a practical example of it, is that when one can lend you like 100 rand, if you can borrow 100 rands from someone, it will be difficult to budget for that 100 rand if you do not know how are you going to collect it back from that particular person. But if that person can then tell you that I will be giving you on Monday 50 rand of that amount, and then on Tuesday 20 rand of that amount, and then on Wednesday 30 rand, then you can be able to budget, because you know that on Monday you are expecting 50 rand, on Tuesday you are expecting 20 rand, and then on Thursday. So this is what we are doing. We are selling on credit to our customers, but we do have a pattern of how our customers pay us. 40% of our customers, they pay us in the month of sale. So we can then be able to budget. We know that 40% pay us in the month of sale, 50% pay us in the month following that, and 8% of our customers pays us in the month following that. So that is why it was easy for us to budget. If our credit sales for January is 204,750, and we know that on average we have 3 collections, then we will know that for a person, those people who will buy in January, we will collect from them in January. We will be collecting from them. We will collect from them 40% in January. We will be collecting 50% from them in March, and then in February, and then we'll be collecting 8% from them in March. Then April and May, there will be no collection, because 3 months would have been expired. So it's January, February, and March. For those people who are going to buy from us on credit in February, the 3 collections will start from February, March, and April. And there is nothing we are going to collect from them in May. Same thing applies in the following month. So this is the debtors collection schedule. So then these 3 totals will then be transferred to our cash budget, because now we know the total amount that we are expecting from our debtors. So that was question 3.1, where we were required to do the debtors collection schedule. And then now let us proceed to 3.2, question 3.2.